Hasbro laying off 1,100 workers as weak toy sales persist into holiday season. Hasbro is slashing nearly 20% of its workforce amid an ongoing slump in toy sales. Hasbro CEO Chris Cox announced layoffs for 1,100 workers in a Monday memo to employees, cuts which come in addition to the roughly 800 jobs eliminated earlier this year. Cox said the decision to reduce Hasbro's workforce was made in light of market headwinds proving to be stronger and more persistent than planned. We anticipated the first 3 quarters to be challenging, particularly in toys, where the market is coming off historic, pandemic-driven highs, Cox said. While we have made some important progress across our organization, the headwinds we saw through the first 9 months of the year have continued into holiday and are likely to persist into 2024. Some Hasbro employees will find out whether their job has been eliminated this week.
Oracle shares slide as revenue misses estimates. Key points. 1. Oracle's revenue came up short in 3 operating segments. 2. The stock tumbled in after-hours trading. Oracle shares dropped more than 9% in extended trading Monday after the software company reported fiscal second quarter revenue and quarterly revenue guidance that fell short of Wall Street expectations. Here's how the company did, compared with consensus estimates from LSEG, formerly known as Refinitiv. 1. Earnings per share, $1.34 per share, adjusted, versus $1.32 per share, expected. 2. Revenue, $12.94 billion, versus $13.05 billion expected. Revenue grew 5% year-over-year in the quarter, which ended November 30th, according to a statement. Net income increased 44% to $2.5 billion.
Stock market news today. Stocks close higher with CPI data, Fed on the horizon. Stocks closed higher on Monday following an uneven start to the trading day as investors look ahead to a crucial inflation update and the Federal Reserve's last policy decision of the year. The Dow Jones Industrial Average and S&P 500 each ticked up about 0.4% to close at their highest levels since January 2022 and March 2022, respectively. Tech stocks also moved higher, reversing earlier losses, with the Nasdaq Composite adding roughly 0.2%, its highest close since April 2022. The moves come as investors brace for 2 events that could set the tone for stocks going into 2024. November's reading on consumer inflation and the Fed's interest rate decision.
Over 115 million people expected to travel during holidays. Airport totals to break records. AAA. The number of Americans traveling during the year-end holiday travel period this year will reach the second highest level in more than 2 decades, according to AAA. The organization predicted on Monday that 115.2 million people will take trips at least 50 miles away from where they live during the period from December 23 to New Year's Day this year. That is a 2.2% increase over the prior year and the second highest number since AAA started tracking holiday travel in 2000. This year is expected to have 3.8 million fewer Christmas and New Year's travelers than the record-setting 119 million before the COVID-19 pandemic in 2019. This year-end holiday forecast, with an additional 2.5 million travelers compared to last year, mirrors what AAA Travel has been observing throughout 2023. More Americans are investing in travel, despite
the Federal Reserve could achieve a soft landing after all. Here's what that would mean for you. Key points. As the Federal Reserve's last meeting of the year gets underway, inflation continues to drift lower, increasing the possibility of securing a sought-after soft landing. Consumers should start to see borrowing costs ease in 2024, but prices aren't coming down anytime soon, experts say. The Federal Reserve is expected to announce it will leave rates unchanged at the end of its 2-day meeting this week after recent signs the economy is in fairly good shape and as inflation continues to drift lower. While there's been talk about an imminent recession going back to early last year, the U.S. economy has remained substantially more resilient than expected, said Mark Hamrick, senior economic analyst at Bankrate. A soft landing appears to be the greatest likelihood for next year, he said. However, the economy isn't out of the woods just yet.
Microsoft partners with labor groups to quell concerns about AI taking jobs. Key points. Microsoft announced Monday that it would team up with labor unions to create an open dialogue on the future of artificial intelligence and the workforce. The partnership comes as Microsoft and other AI providers face increased pressure from labor groups and regulatory bodies over how AI will displace workers. The alliance will include Microsoft-hosted labor summits to incorporate feedback from labor leaders and workers. Microsoft on Monday announced a partnership with a major labor group, which represents 60 unions and 12.5 million workers, to create an open discussion on the future of artificial intelligence and quell fears that AI will replace jobs. The partnership with the American Federation of Labor and Congress of Industrial Organizations comes as Microsoft and other AI providers face increased concern from labor groups and regulatory bodies over how AI will displace workers. The alliance will include AI learning sessions.
Fed rate hikes are over, economists say. Here's what experts say you should do with your money. Americans are paying the price for the Federal Reserve's flurry of interest rate hikes, engineered to battle the hottest inflation in 40 years, through sharply higher borrowing costs. But with inflation now receding, the Fed's rate hikes may be drawing to an end, and that has important implications for your finances, according to economists. Wall Street is now forecasting that the Federal Reserve will keep its benchmark interest rate steady at its December 13 meeting and beyond due to cooling inflation and a slower job market. After that, the Fed could begin cutting rates as soon as early 2024. Some economists are now predicting. To be sure, Fed Chairman Jerome Powell is keeping mum on the bank's next moves, saying earlier this month that it's too early to declare victory over inflation or to discuss when it might start cutting rates. But he also noted that consumer
regulators caught Wells Fargo, other banks in probe over mortgage pricing discrimination. Key points. Wells Fargo received an official notice from the Consumer Financial Protection Bureau on problems with its use of mortgage rate discounts, sources said. Wells Fargo hired a law firm to grow mortgage bankers whose sales included high levels of the discounts, said the sources. Several banks received MRAs about lending practices last year, the CFPB said without naming any of the institutions. In their industry review, regulators found statistically significant disparities in the rates in which Black and female borrowers got pricing exceptions compared with other customers. Wells Fargo was snared in an industry-wide probe into mortgage bankers' use of loan discounts last year. CNBC has learned. The discounts, known as pricing exceptions, are used by mortgage personnel to help secure deals in competitive markets. At Wells Fargo, for instance, bankers could request
Nvidia to expand ties with Vietnam, support AI development. U.S. chipmaker Nvidia's, NVDA, chief executive said on Monday the company will expand its partnership with Vietnam's top tech firms and support the country in training talent for developing artificial intelligence and digital infrastructure. Nvidia, which has already invested $250 million in Vietnam, has so far partnered with leading tech companies to deploy AI in the cloud, automotive and healthcare industries. A document published by the White House in September showed when Washington upgraded diplomatic relations with Vietnam. Vietnam is already our partner as we have millions of clients here, Jensen Huang, Nvidia's CEO said at an event in Hanoi in his first visit to the country. Vietnam and Nvidia will deepen our relations, with Viettel, FPT, Vingroup, VNG being the partners Nvidia looks to expand partnership with.
Bitcoin slides 7% to under $41,000 in volatile trading following early December rally. Key points. Bitcoin fell 7% Monday after topping $44,000 last week, according to Coinbase. The move comes after a 12% advance for Bitcoin in December, according to Coinmetrics, as expectations grew that the U.S. could soon approve its first spot Bitcoin ETF. According to CoinGlass, Bitcoin has seen $119 million in long liquidations over the past 22 hours, while Ether has seen $99 million. Bitcoin fell Monday as investors took profits after its December rally. The price of the cryptocurrency was recently lower by more than 7% at $40,887.81, according to Coinbase, after a big drop Sunday night that at one point took it as low as $40,300. Bitcoin topped $44,000